Welcome back to Sibos TV. We're coming to you live from Concourse 2 here at the World Trade Center. Right now, we're going to talk about asset servicing. Why is the pace of automation accelerating? Here with me are Tim Lind. He's the Global Head of Legal Entity and Corporate Actions Enterprise Content at Thomson Reuters. Jim Phelan is the Executive Vice President at State Street. Philippe Rouault is the Head of Clearing, Settlement and Custody Products at BNP Paribas Security Services. And Andrew White is the General Manager, Settlement Services at the Australian Securities Exchange. Thanks very much to all of you for coming in. So what kind of session was it? You've just come out of it. You were the moderator. What did you all say?
So we touched on three key themes. So what are the catalysts that are driving investment in the corporate actions process? What's the role of the regulatory community and change in regulation in driving investments in corporate actions? And finally, how do corporate actions differentiate a bank? How do they show they can be timely, efficient, automated based on their capabilities in corporate actions?
We polled the audience and I think there was pretty strong consensus that corporate actions activities are very important to their organizations, important to our customers. And interestingly, I think increasing in complexity and really in dire need of some increased automation.
I think we went through all the hot topics that we are dealing with at the moment, both the regulation, EMIR, Dodd-Frank, and the impact on collateral management, but also in Europe more target to securities, transaction tax, so a lot of topics that are top on the top of our agenda.
And I think one of the points was really that straight-through processing corporate actions can take cost out of people's business, and that's obviously very important in the current financial environment.
What are the main corporate actions, the most important ones that people felt there was work needed to be done there that they're having difficulties with?
Sure, the voluntary events create some risk because they require an investor to make a decision. So clearly those are the ones that come to the surface.
And how are you guys making that easier or trying to make that easier for them?
And obviously what we have is a lot of regulation that you heard Philip just talk about that's going to actually make those more complex, okay? And at the same time, our customers are expecting that process to go faster. And so our challenge is how we're going to deploy some new processes and some new technologies to basically be able to create that
So give me
result.
some examples of some of the things.
Well, I think clearly, and from my perspective, one of the biggest new challenges we're going to have is we're going to continue to have a lot of unstructured data in this corporate actions process. In other words, we've got a lot of good industry initiatives that are going on and some that were very noticeable. Andrew in particular can talk to one of the ones that's going on in Australia that really are going to help make the process much more efficient.
So if I chip in there, I mean, I think what we're trying to do is really straight through process the entire process across the value chain. So that's really from the issuer who's making that corporate event down to the end investor who's then faced with a decision about what they do with that corporate event, and through the custodians, through the registries, through data vendors, all of that make that a much more efficient process than it is today. I think that has real benefits to the issuers if you think of it from their perspective in terms of the efficiency of their capital raising. But it also has benefits in terms of the retail investor. It enables them to make better investment decisions because they're getting more data, better data, and they're getting it quicker.
I agree. I mean, one of the key challenges we are facing as a custodian, we are global and local custodian, are that we have a significant increase of the number of events, and they are more and more complex. Number of events we have, depending on the market, we have seen 14 to 30% increase in number of actual corporate events. In terms of complexity, we have seen, let's say in some markets, a rise of 60% to 200% of the optional dividends on the most complex corporate action. And the way we try to solve this at BNP Paribas Security Services is that we try to rely as much as possible from our teams that are close to the market, close to the issuer, close to the CSD, to capture accurate data and deliver it very STP through the global custody chain.
What about cost? Tell me some of the issues that you guys are finding on cost and who could make that better and where is the technology to make that better?
Well, I think one of the areas, and you've heard a lot of it in the conference earlier from other speakers, is clearly the opportunity. Some new technologies, both cloud computing and big data, are huge opportunities for improving the corporate actions space. The opportunity to basically be able to look at structured data, unstructured data, and be able to automate and machine read and basically be able to make the decisions.
Are you guys using that in your institutions at the moment?
We're just starting to, in our case, we're just starting to use more of and attack more of that unstructured data and to be able to deliver a more efficient and faster solution.
Yeah, we're just starting as well. We have had a press release last week with the launch of our big data model, whereby client can source structured information from our data warehouse.
I think also if you look at ways of dealing with the cost issue, really when you talk about inefficiency in that chain, it's addressing that. It's the sort of inefficiency that should drive the innovation. And sometimes the solutions can actually be quite straightforward. You're taking something that's a very manual process today and you're automating it, or you're structuring it in a way that becomes self-validating for people. And certainly in terms of the issuers, when we've spoken to them, we've been able in Australia to make that a mandatory process for them, because we can show the benefit of an efficient form process for them to get those corporate events in. It's self-validating, and they can see then the benefit of that flow through in terms of then better investment outcomes for them in terms of capital raising.
I think we're really in for a major step change right now with the technology. I think if you looked at this corporate actions the last 4 or 5 years, the themes have been somewhat similar, but I think we've got some opportunities now with some new technologies and some industry efforts like ASX and others to make some breakthrough type change.
I'd also like to add, we look at corporate action in terms of cost, but now we look at corporate actions in terms of how it supports collateral management, risk management. You can't use securities as collateral if you can't manage the corporate actions. It also helps to differentiate the services of a custodian. So it's not just about automation and cost, it's about driving new business opportunity, differentiating yourself as a bank, managing risk, all the things that are topical in this environment.
What are the main issues from your clients? We had a chap on earlier and he was saying, you know, this is my life, I get shouted at from this person and this person and this person. What are some of the things that you are trying to, or you're finding very difficult to try to juggle all the balls?
You get shouted at a lot for corporate action, so that's an excellent
So
question.
we are compressed. Investor wants more time. To make investment decisions, so they want to be very close to the deadline. And I think it's a big challenge. To compress our cut-off time to enable investor to make good decisions. We are also struggling with the cost, as you said. So we've done investment in systems, in operating centers, from outsourcing, offshoring. But I think to a certain extent, we are also underpricing the corporate action work. And I think there's a big challenge in terms of price structure that the final investor has to pay from our services.
I think from an exchange perspective, we recognise that customers are faced with their own change agenda, things that they're trying to do, and they're also faced with a regulatory change agenda, and that takes a lot of their spend. So therefore, really, the onus is on us, I think, to show that what we're doing adds value to their business. Either it's a revenue opportunity for them, or it takes cost out of their business, as with corporate actions. And I think the point there, Tim raised collateral management. I think that's critical. I think that's where we can show that we do add value to their business, both in terms of the revenue opportunities that come out of it, but the efficient way that we deal with it, taking costs out of the business.
That's a very important point. The collateral management area, and as new regulations come out, they're going to increase the value, basically, of being able to manage that collateral effectively. And that adds a lot of complexity to this process. And so the customers are going to be looking for us to solve those issues.
Can you give us some examples specifically of how you've been doing that?
Absolutely. So I spoke earlier to the corporate action value chain and the way we're dealing with that. So really in terms of making it mandatory for issuers, and to do that you have to get the buy-in from issuers that it adds value to them. And then really showing the value again to the custodians and the registries and ultimately the end investor in terms of either cost coming out of their business or better investment decisions being made. So I think that's the corporate action example. I think more generally, when we listen to customers, we hear that we need to be world class in what we do. We need to be globally connected in what we do, and I think that's the role of the standards that we talk about a lot at Sibos. In terms of allowing that global connectivity. So it's not just us at ASX doing this initiative. There's a similar initiative by DTCC in the States, JASDEC in Japan, SGX in Singapore, and I think that's really powerful actually for the global community.
Just on a point of collateral, I think final investor will have to post much more collateral, either to CCPs or their clearers, or to their dealing brokers, and we want to facilitate that. So we have developed agency collateral services whereby we can optimize their collateral, transform their collateral from equities to high quality assets, and help them posting the collateral to the various infrastructures. So we will as a kind of gateway to the various collateral takers in the marketplace, such as CCPs, tri-party programs, central banks potentially.
And the regulatory environment is upon us right now to make some pretty significant changes there that are going to increase the demand for collateral significantly.
Absolutely, and I think that creates opportunities as well. We spoke about in the panel that that creates opportunities down to the fund manager level in terms of being a source of both cash liquidity and a source of additional securities. And then really it's the onus on the collateral management providers to show that you're optimizing that collateral flow for them.
Okay, well, we'll leave it there. That's all we have time for, unfortunately. Thanks very much. Hope you have a great time in the rest of your stay here in Dubai. Enjoy the rest of the conference.